Welcome to a special edition of 5 Minutes where we're going to dive deep into the complexities of Florida's property insurance market. Over the past few decades, this market has faced a significant challenge, from devastating hurricanes to legal financial hurdles. Today, we'll explore the history, the current issues, and the potential solutions for this ongoing crisis. Florida's unique weather exposure is at the core of the challenges in the state's insurance market. Florida's geographic position makes it uniquely vulnerable to hurricanes, and in these storms, they're becoming more intense and destructive. Rising sea temperatures by up to 2 to 3 degrees in some regions, they're fueling stronger and stronger hurricanes, which act like heat engines, leaving devastation in their wake. I spoke with meteorologist Justin Roth to get his take on the frequency and severity of these storms.
So what are you seeing in the data that points to whether or not there is actually frequency or severity that we should be thinking about?
When you think about that and climate change, it's kind of all melded together. I mean, no matter what side of the political spectrum you're on when it comes to climate change, I guarantee you almost every insurance and reinsurance company believes in climate change and factors it into some of their pricing just because of the fact that they see it in their loss numbers. Frequency and severity are a little bit hard to mess with, honestly, because you think about Florida specifically, and obviously it's a peninsula and it's just kind of sticking out in between the Gulf of Mexico and the Atlantic Ocean. And really, the main thing is, we can't predict how many storms are going to affect a certain area of the country every year. We throw out these forecasting numbers and they're generally pretty correct ahead of season, but really we just kind of gotta wait until it kind of all shakes out. When you think about frequency in general, I looked up a stat right before this show, and there's been 79 tropical cyclones, so you can call that like a tropical storm or hurricane, whatever, since 2000 that have affected Florida in some way or capacity. So certainly there's a larger presence of tropical cyclones currently. It's only been 24 years since 2000, so that's a lot of storms affecting Florida in a short period of time. And we can conclusively say from a scientific standpoint that we are seeing more rapidly intensifying storms, which should be a concern for everybody. Right. If I go to sleep one night and it's a Cat 1 hurricane, I'm probably not evacuating, but what if it goes up to a Cat 4 or Cat 5? That's concerning. Right. So there's things like that. And then obviously another major concern, I think it's been tracked very well over the past few years, is the sea surface temperatures. So ocean water plays a monster role in developing a hurricane. Think of a hurricane like a giant heat engine. The warmer the water, that's what it loves. So when we start seeing temperatures going up 2-3 degrees, which I know doesn't sound like a lot, but for a hurricane, it's a lot. And so things like that really factor into the severity.
To fully appreciate how the changing climate has directly impacted our present state of the market, we've got to take a look at the past. In 1992, Hurricane Andrew struck Florida, causing over $26.5 billion in damages and leading to the insolvency of at least 16 insurers. This catastrophe, it exposed the vulnerabilities in Florida's insurance infrastructure. So in response, the state established the Florida Hurricane Catastrophe Fund in 1993, which was intended to provide a financial safety net for insurers facing massive hurricane-related losses. The FHCF is a state-run reinsurance program which is designed to stabilize the Florida property insurance market by reimbursing insurers for a portion of their catastrophic hurricane losses. Unlike private reinsurance, the Florida Hurricane Catastrophe Fund offers coverage at a lower cost, making it a crucial component in maintaining insurance availability in the state. In recent years, the exodus of major insurers like State Farm and Allstate have transformed the Florida insurance landscape. In 2009, State Farm announced that it would stop writing new homeowner policies in the state, citing unsustainable losses and regulatory challenges. Allstate followed suit, pulling back its presence due to mounting costs of regulatory pressures. This left many Floridians relying on Citizens Property Insurance Corporation. That's the state-backed insurer of last resort. Now here's a concern. Citizen now insures over 1.3 million policies. That's more than triple what it was designed to handle. With its rapid growth, Citizen now faces significant underfunding challenges. In fact, in the event of a major hurricane, it's estimated that Citizens could face a shortfall of up to $1 billion, potentially leaving policyholders exposed. If losses exceed Citizens' reserves, all Florida policyholders could be facing a special assessment, essentially a surcharge to cover the gap. This creates a precarious situation where the stability of Florida's insurance market, it rests on an underfunded insurer that may not be able to meet its obligations in face of a crisis.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.